Hi, it's Richard Pennell from the Mortgage Home here. We thought it would be really relevant and useful right now if we issued a bit of an update about the mortgage markets. Many of you will have seen the media headlines and I guess the chaotic nature of the markets right now. So we wanted to give you our take on it from our side of the fence. The first point I want to make is really don't panic. What you do need is some really objective sort of expert advice from people who are in the know. And this is our sort of take, I guess, on certainly in terms of buy-to-let and residential mortgages as it is today on Wednesday, the 28th of September. So roughly 75% of mortgages from the mainstream lenders have actually been withdrawn in the last 48 hours, I would say. So that leaves about this 25% list of lenders that seem to be right now still continuing to offer the deals across the range of both residential and buy-to-let. But it is a fast-moving situation. The reason for the withdrawal at such a pace from the lenders is that the government last Friday obviously delivered their what they were called a mini budget, and clearly, as we've all read on the media, etc., that's gone down really badly with the wider experts and other sort of financial institutions, with the markets, and essentially, from a banking point of view, and other experts in this area, the perception is that with so many tax giveaways, that means there's going to be a huge knock-on effect by pushing inflation more, because we all would feel from that particular budget, we've got more money to spend, and therefore that will have an impact on inflation and push it even higher. And therefore the markets and the banks immediately are turning to the Bank of England, because they know that the Bank of England has got one really major goal amongst their other, I guess the remit of the B of E, is to get inflation back down to 2%. And they don't have many tools in the bag to go at other than interest rates. So the real obvious answer is interest rates have got to increase. By the way, my view is they're always going to increase at the next meeting anyway. I know they've gone up just last week 0.5%. My public view was always that they were going to go up again before Christmas. I think that was a given. Right now, though, the question is, will the Bank of England wait until their next policy committee meeting, which is the 3rd of November, which is 5 weeks? And frankly, my feeling, that's a hell of a long time. And I don't see it happening. And there's a lot of growing pressure for the Bank of England to come out a lot sooner and actually put rates up quicker, some sort of urgent review and decision on rates. And therefore, the banks and lenders are saying, look, we're withdrawing rates, but we don't want to put the new set of products because we don't know how to price them, because we don't know quite how the Bank of England are going to react, how quickly and how much are they going to put rates up by. Therefore, we're hesitant to be able to reprice with any certainty. So all eyes right now, I think, are on the Bank of England to come off the fence and give some clarity so that the banks can now relaunch all their new products. So as soon as we see some change on that front, or whether something else happens that allows the banks to price with more certainty, well, fine. But right now, I think that we're all looking at the Bank of England to make the next move. What does that mean for you guys already with mortgages? Well, if you've already got applications submitted with lenders, then those are all being honoured. I've only seen one lender, and we don't have any clients with applications in right now with that particular lender, but pretty much everybody else honouring the applications that have already been submitted. That locks in the rate, and we haven't got any of the mainstream lenders saying that they withdraw or cancel rates. If we've had decision in principles done, but we haven't yet got the documentation together, we haven't maybe agreed a price if you're purchasing a property. So the application, the full application is not submitted. That has never locked in the rate. So unfortunately, for you guys that have had decisions in principle, yes, the DIP is still honoured. You have been approved. You're credit worthy. You meet policy, but the rate is not secure. So as and when the documentation is back in, as and when the signatures are there, as and when you agree your offer or how much you want to borrow, whatever it is that's stopping you getting that application submitted, then it will be at the new rates that we can find right now from that 25% of lenders that are still sort of fully lending. So it could easily be that, yes, we've done a decision in principle with lender A, but they're one of the 75%. So please bear with us. That means that we're going to have to refresh the research and you take a decision whether it's still right for you to move forward. Small areas that are totally unaffected. If you want to do a product transfer, and by that I mean if you've got a mortgage already in with a lender coming to the end of its fixed rate, for example, right now or in the next month or so, then generally speaking, the product transfer products are still on offer. So we should be able to move you across to that new rate, hopefully without any bumps in the road. There are some exceptions to that, but generally speaking, they're still there. For some strange reason that I haven't got my head around yet, 80% borrowing on buy to let are still pretty much there. So if you were looking to borrow that little bit more, there seems to be pretty much a full range of products out there. Can't quite figure that out yet, but right now they're there. Bridging finance, that seems to be fairly unaffected. So if that's you're still looking to do something that requires bridging, then that looks to be unaffected. As I said, it's a fast-moving market. We will be monitoring this, frankly, daily. It seems to be too long. We're doing it literally on an hour-by-hour basis, contacting, chatting to lenders, waiting for their updates so we can see how this situation changes. But I do think all eyes are on the Bank of England that can unlock this little bit of a stalemate right now. If anything just changes, we'll post another update to you guys just as soon as we have it. Please keep your appointments. If you've got any in the diary, don't be cancelling them unless you feel you want to put it on pause, but we're more than happy still to continue with appointments and give you our best take on your situation. Everything is individual, so it might be that you're unaffected by what is going on right now. So please, as I said, don't panic, get that individual advice that is right for you, and we're obviously delighted to help as much as we can and give our take on where things are right now. So hope that's been of use to you, and we'll keep you updated as we go. Thank you.